Markets are breaking out of a downtrend resistance levels while some of the commodities are rolling over and looking fairly troubled. Somewhat akin to the GFC 2007-2008 when markets had plummeted but commodities were looking and holding strong until they fell over. Gary Glover is walking us through the indices, the charts and trading opportunities this week. Good morning, Gary. How are you?
Yeah, I'm great, Chris. Bit to unpack there, isn't there?
It is. I've always been quite perplexed about that huge disconnect in time when the markets absolutely crashed in the GFC, but the commodities held up. And that was a different story for us in Australia because we're so commodity heavy and laden. And you'll get into that in a second. But I was excited to read that in the report. So I don't know. How's that looking for you when you have a look at the NASDAQ and see that's kind of starting to turn? What's the reminders that are coming up for you in that space?
It's funny. I was thinking about the commodities and resources this morning in there, and I've probably been in the markets for a lot longer than maybe most of the people listening. But I remember years ago I was working at Morgan's, and we had a couple of guys who were resource sort of analysts and resource brokers. So they're just sort of father and son there who were real expertise in that resources space. And I can't remember. I was trying to remember the year, but it was a couple of years there. They were twiddling their thumbs. They had nothing to do. No one wanted to buy a resource stock. No one wanted to own resources. No one wanted to trade resources. It's funny, people forget that can happen. That it's been a long, long time since that has happened, but resources can go through some pretty negative cycles there. So
we could probably look it up on the Western Australian GDP and it'd stand out.
Yeah, but it's just, it seems unfathomable at the moment, and obviously resources have been fairly robust since sort of China really sort of had that growth sort of spurt there, you might sort of say. But yeah, they're not always on fire, resources. They can go through some lull periods, and just most people won't understand that that's still a cycle which could occur. I know it seems unfathomable at the moment, but it has happened, and it probably will happen again. So just got to keep that in mind.
Well, with that in mind, if we go through the indices, you'll pick up on the ASX and the commodities and how that's being impacted. But if we have a look at the NASDAQ, you've mentioned for a couple of weeks that it has been outperforming. It did well. It rallied out of that most recent low and outperformed, I think it was 1 week where it was 4 out of 5 days. It has popped up, and looking at those candles here, we can just see sort of the most recent weeks have been pretty solid and strong. What do you read in the NASDAQ indices at the moment?
Yeah, so look, we saw a bit of outperformance the last couple of weeks, which is interesting. So with those inflation numbers starting to cool, then we're starting to see a bit of outperformance there in the growth there, because then that's obviously, if inflation is going to be under control, then growth can sort of thrive. And that's what we sort of saw the last week or two. Obviously, last night we saw Spain inflation number a little higher than expected, so the market got a little spooked by that, you might sort of say. So we saw the NASDAQ was off a bit more last night. So so those are sort of things you'll sort of see there based on those inflationary numbers there. But looking at the chart, I think I sort of mentioned now, I thought it might be able to go slightly higher here, but I think it's still going to be building process there. I remember sort of 02, 03, just took a little while after the growth crunch to sort of find its feet, get going here. And, I think we're seeing some positive signs there, but the volumes are still sort of modest, Chris, sort of through the off the lows and stuff there. So some stocks are sort of showing a little bit more volume than others sort of a lighter orientation. And it's a tricky one there, because obviously you can look back, you can see some of the early stages and building stages can be on lighter volume. So the market still can sort of go up on lighter volumes there, sort of almost finding its feet. But you can go through a bit of a building corrective process as well, like more of a sort of sideways orientation. So I do favour that. I think there's still a few uncertainties, some risks there around. So I think this will take a little while to build here. So that's been sort of my sort of thesis on the market here so far, is that it'll be a bit of a building process. And then usually October in the second years, and then March in your third years are typically sort of coming out of those midterm years. So so many October lows in the midterm years, and then a lot of March high lows in the following year. So that's the sort of cycle I'm looking at there. And just the price action sort of almost encouragement of that as well. So in recent cycles, that's been pretty prominent as well. So yeah, just think I think it's positive, but I think it's a little bit of a building process there. So I think you can take your time, sort of build slowly here, and sort of try and pick the stocks that you want there. But just a little patience is required here. We don't need to be rushing, I think.
That's good words. Take your time and build slowly. If we look at a turning point, it's the S&P 500 has definitely sort of hit its stride much earlier than the NASDAQ. It came out much stronger, nowhere near as much as the Dow. We'll have a look. But it's sort of up at this resistance level that you've pointed out a few times before. It cracked through it last week, but are you looking for it to sort of maybe still rise a bit more and then drift back onto that support line that was resistance?
Well, yeah, just look, this is important for everyone in the market, but it's not that important to me. So I just see this, this chart getting posted everywhere on Twitter and other sort of social platforms as being significant. So look, it is somewhat significant. There's obviously enough traders watch it. It does come significant on its own there, but it's not the sort of the criteria that I'm looking for, from an important point of view. So I still think this is sort of building process there. I was thinking that was actually probably going to pop out of it here, and then maybe come back and track along it, and then go from there. That's sort of my best guess there. And just in terms of price action, sort of volumes, and what's sort of happening here, and looking at the cycles there. So yeah, it looks like we've sort of popped to a new high there. Had a bit of a grind here. I've still got it pretty messy here. I have been following a few cycles there, and kind of one of the closest cycles that it's mimicking is sort of suggesting there we probably weaken off for a few days. We'll retest a few days, and then we'll weaken off into the end of February, early March there. But that's going to be choppy, a little bit of a broadening type of pattern there, but still pretty choppy into very early March there. So yeah, just build slowly here. I think it's constructive, but I think I think it needs a bit more time here.
Well, one that has been getting up towards the highs is the ASX 200. You've talked about commodities in this report. You've been concerned that they may roll over, and we're reminiscent of that 07-08 period. This is kind of the tale of the two speeds, two stories, because there's the international indices, and as you're sort of mapping those out, we do have a correlation with them, but then we have a heavy reliance upon BHP and RIO that you've previously noted, and will do later in this report, how strong they've been performing. So put those two together, what happens to the Aussie?
Look, the Aussie economy is definitely stronger than most economies. So obviously our market has been as well, but the commodity market has been on fire there, which is sort of quite common in high inflationary environments. So that all makes sense as to sort of why, we've outperformed here, why we're doing well. But yeah, I just still sort of have a few concerns there. With CommBank at 109, 110 there on 21, 22 times earnings. BHP and RIO sort of back to sort of all-time sort of highs there, or pretty close to them as well. It's just I'm struggling to sort of see where we're going to get the gains. We're going to have to sort of start to see other sectors, some growth sort of start to shine through, and I think that will happen there, but I think that's sort of choppy. I think it's going to be a building process there. I'm still pretty concerned about commodities there, just because of if the Fed is going to do the right thing here and get inflation under control, they're taking it super seriously, and I doubt whether they're going to be, I think they'll probably lift rates here slightly higher here. They'll try and hold them for a while, but it's I just think that's going to put a little bit of pressure on commodities here. Everyone's talking about China reopening and all the rest of it, but I just think you just could look through the cycles there. Just normally, sort of commodity cycles should start to sort of cool there, and previously there, sort of that 2000 and 2003 period there, growth started to sort of get going, and our market sort of lagged a little bit, found a deeper low a few months later because commodities underperformed here. So I could be wrong, Chris, but I just think there's a high risk here of that. You got to think here. one of the key ingredients which has led to inflation, peaking or pushing higher has been a lot of the commodity sort of prices have moved higher there. So that's caused increase in inflationary pressure. So if everyone's correct, or if the central bank gets its way here and is able to get inflation under control, and inflation eases, then they'll be looking to push commodity prices lower here. So if they get their way, then the commodity should ease. But as I say, sometimes the 40s and the 70s, sometimes they do show that sometimes central banks don't get what they're after. But I do like Powell's conviction there. I think he's pretty robust here. Going to keep rates pretty high. He understands the risks of high inflation. That's definitely a lot more damaging than say 12 months of sort of slightly higher rates. I know they're sort of going to slow down and maybe manufacture a recession there, but that's a short recession is probably a better outcome than a decade of high inflation. So people don't really understand that, but history's lessons are pretty clear. So we definitely do not want a decade or 5 years of high inflation.
Yes, you did unpack the 40s and 70s inflation periods once before, and we'll try to put a link on screen so people can go back to that video. But we move to the Dow Jones. The Dow Jones has been the dominant performer, the best performer out of those October lows that you did pinpoint so very well throughout last year, and really focused on those October lows, and you've done well into it and out of it. The Dow's been the best performer of the indices out of it, but it seems as though it's slowed. You'd mentioned how the NASDAQ had been outperforming, not so much last night, but the Dow's kind of been going sideways. So how do you read that with the inflation, the commodities that you're just talking about? Is there much to change for the Dow?
No, not too much there. I mean, we just started to underperform there. Obviously, the NASDAQ has sort of started to outperform, which honestly is a great sign for markets if that's the case. Because if the NASDAQ is getting stronger, that means inflation is starting to weaken off there. The market's starting to get convinced of that. There's going to be some good and bad days in there, some good and bad data there. But if they're able to manufacture that, then that's good for equity markets here longer term. So that's what we really want to see. So the Dow sort of obviously after outperforming here, it's just started to sort of cool off a little bit, and that's a good sign too, Chris, because that's just sort of showing that sort of there's more money sort of maybe coming out of sort of this safer sort of top tier and starting to move into next tier. If you think about the dynamics of markets, typically when you sort of come out of a big low and in the start of a bull phase, usually the money goes to the top
blue chips.
Yeah, it goes to the top sort of top 50, top 100 sort of first. So it goes to the safest sort of stocks early, and then as the market gets more comfortable that we're in a bull market and that we're out of the bear market, then they'll start to sort of move into mid caps, and eventually they move into small caps. So small caps haven't moved too much yet. Definitely started to see a bit of movement in the mid caps, but that's the normal sort of transgression there. Is sort of big caps first. Then, once we want to take some more risk on, we move into mid caps, and then once the market's really starting to heat up, then we start to, we really get into small caps. So, just sort of starting to see that, I think that sort of second step has definitely occurred here. So those are good signs as well here. But it's a building process. Obviously, Rome's not built in a day. Takes a little bit of time to sort of build here, but the signs are good. I personally like what I'm sort of seeing here. That sort of gives me more confidence about maybe the sort of the back half of this year. So I just want to sort of see basically not, I'd love to see just a mild decline here into early March. Not too much volume there, just maybe remain sort of choppy, and just not seeing any sort of selling on the way down here, just a very light selling. And if we see that, into early March here, then that'll be a really good sign, for the second and sort of third quarters of this year. So fingers crossed that's the case.
Well, that's what we'll look for. You've also picked out a fair few trading shares for this week. So we go to the ASX itself, which is listed on the ASX. This looks like it's had its low back here, 2020, the early part of 2021, retested it as the market came down to its lows that you picked so well, so that's the old low March 2021, we didn't quite get there recently, did we? So how do you read that?
Yeah. No, you got a big correction there for what's a sort of large cap sort of market orientated stock. So fairly large sort of price correction. The thing I like about it there, Chris, is the false break. We go back and retest the low. We don't follow through. We see big volume down there, which is, when you see big volume coming at lows, it's, you got to ask yourself, is it accumulation or distribution? Me personally, when I see them down at new lows, they're usually sort of signs of accumulation there. So we've seen a bit of a pop, come back for a retest of that low. Thing I like about it again is it probably used up twice as much time to get down there, Chris, as well. So we rally there for sort of 3 or 4 weeks. We come back down for sort of 7 or 8 weeks. Don't get a new low, and we saw definitely the volume dry up as we sort of reach those lows there. So basically the selling dried up, and then we sort of started to build here. So again, might take a little bit of time here, but I do like the signs here. I think this is pretty constructive. So we've seen the volume pick up the last couple of weeks at the lows. So I like that. A bit of a pause week last week, not much volume there. So good signs.
The next one on the group is the Star. So the Star's had big volume. I'll scroll down to this chart and see that that's just massive volume on this huge gap down here. So there was a lot of headlines, a lot of media covering the Star.
Yeah,
it's almost back to those lows that it saw in the COVID lows, complete lockdowns. Would you be trading this? Are you looking for something else? Is it the watch list? What do you see?
Yeah, so it's lost 2/3 of its value from the last 15 months, Chris. So it's a fairly nasty decline there. To me, it's very reminiscent of the Crown, of that sort of Crown Resorts. So if you remember when they sort of got into money laundering issues, and they had a fairly large, nasty decline as well there. Still some pretty good assets there, and eventually, Crown sort of after getting wrapped over the knuckles, and then directors having to forced to resign, and then a bit of a change in management and all that sort of stuff there, which is exactly what's occurred here. Very, very similar, and the share price has taken a bath here. Just seeing exhaustive sort of price characteristics there, just sort of that really heavy selling into the low. We had a little bit of a bounce, and then we're just sort of starting to drift there. So it just sort of reminds me, I know we didn't come to a new low, but it's a fairly large decline there on our weekly, big percentage as well. Just like the fact that it's just sort of starting to sort of stabilize here. The daily sort of showing signs of sort of building there. So I do like this here. Bit of a bottom dwelling here, which is probably not the safest way to go here, but I just like the fact that it is starting to sort of consolidate, and our daily will probably show a little bit more of a sort of a pennant or flag sort of type of consolidation there. So do like that there, and the volume's a bit lighter there on those consolidations. So I just think there's some good signs there for Star there, and just Crown basically initially started to sort of slowly sort of climb. As it sort of got higher up, all of a sudden we had some takeover speculation, and then it got bid for. So it's I just think, I'm not saying there's going to be bid for, but I think there's some value down here, taking a bath like this, and I think looks like a lot of the bad news is sort of out there, so I think oftentimes this is the point where you can sort of start to see the stock sort of recover. Initially it will be sort of slowly, then it'll start to improve and move a bit faster.
Well, the other one on your list is Seelct Harvest. We're talking about share prices falling. It's done that. It fell, sort of looking at the lows here. So early 2021, we came back, found support, rallied, took a bit more time, but came under, kind of found support around those lows throughout the mid part of last year, rallied up, got back over that, what was support became resistance, but then quickly came down. So what kind of position or charting pattern are you looking for here? Is it building a base? What do you see?
So it's sort of Seelct Harvest is very reminiscent of like a lot of the soft commodities. Really, quite probably high delta swings there. So big moves up and big moves back down again as well. But just large sort of swings in the market there. But I was just sort of watching this, sort of went down there recently, had a bit of a bounce off the low there, but then it sort of came back for a retest of the low. And that sounds funny. The bad news has sort of came out and actually washed that stock out there, sort of actually like a spring. So on the daily there, you'll see like a little bit of a false break, a retest of that low, and a big washout there. And that was on basically a market update, basically, disclosing there that, prices have been sort of soft, due to sort of some weather matters, and also the fact that China and some of the other nations have been offline there because of sort of COVID there. But yeah, I think those prices should stabilise. Obviously, China came back online. They're a major buyer of almonds. So, but yeah, it just looked like, that's, again, it's sort of kind of buy the rumour, sell the fact here. In this case, it's sort of been sell the rumour, sort of buy the news here. So just the fact that it sort of washed out and then recovered on that sort of news, I think all that, I guess that bad news is sort of known here. So
that was getting factored in the drop here.
Yeah,
that was just confirmation of what were the rumours.
So I wouldn't be rushing in here. I just think what it should do there is should start to consolidate here. Sort of 380, sort of 390, sort of in there. So it should spend a couple of weeks actually sort of trying to consolidate. So definitely one that I'm going to keep a close eye on there, just because I know that sort of being a high beta sort of stock, it will move. So so I think if this sort of just eases back into that sort of 380, 385 range, and doesn't want sort of lighter volume there and sort of holds nice and tight there, it could be a good little signal there. Just looks like a classic washout, a bit of a spring there. So, yeah.
Well, before we move into commodity companies, you've got Megaport, which is one you've traded a few times before. You've done some videos on that. It's fallen, but that's provided multiple touches on these lines here. So this triangle here, there's many more touches on the downtrend line, the support line at the bottom, got a couple of touches. You've got it breaking out here or trading above that. So how do you look at this chart?
Yeah, look, there's some big volumes there too. Like I know that the price is sort of halved, or probably more than that, almost. Probably gone by down a third or something there. So, but that does increase trading volumes there. But still seeing sort of pretty steady volumes down at a low there. Just a bit of a building process there. But it has sort of popped out there 2 weeks ago, and then it sort of did go on with it last week there, which is a good sign. Just starting to see the volume the last 2 weeks is pretty, is modest but supportive. Kind of the early signs here. So yeah, I think this is sort of positive, but again, I think it takes a little bit of time here. But again, it just sort of shows to me that a lot of the growth stocks are sort of starting to show some positivity, and yeah, just some good signs here.
Well, now we move into the commodity side of things. You've picked some good charts here. Fortescue, roaring, but you've got what catches my attention is you've written on this chart A, B, C. So is this
C maybe?
A?
Yeah.
Well, it's squiggled there, but this is B in itself. Bit more to it than that, and then it's possible that we could see C. Is that what we're seeing?
Yeah, I personally would have liked to have seen a C down the bottom of that.
Down
that sort of trading line, because then you sort of have a bigger clean out there. We never really got that, so I'm not sort of tied to Elliott Wave sort of patterns and stuff there. This might be the B wave here, and then we're going to see leg down to a new low here sort of come. But the two things that are quite noticeable on this chart to me are the lack of volume. And the decline in volumes. So basically, as the sort of stock has rallied here, the volumes have gotten lighter and lighter and lighter. So this is not a sort of strong impulsive rally on strong volume. It's actually a rally here on declining volume. And if you go back and look at 2008 peak, so I think we sort of went up 07, came back down again, went up and retested the high, went to slight new highs there for BHP and RIO. That last leg up was on declining light volume as well, and then we had a large correction sort of follow that. So just this is a rally there that's not on a lot of commitment, and the stocks are outperforming their commodities. as well. So just a bit of a concern to me. The second thing is we've gone back to retest that high, gone to a slight new high, and then kind of rejected there last week. So just saw a little bit of trading volume on the daily chart, going to, like a little bit of a false break of the high, and turned down there. A bit of a reversal pattern there on Friday. So yeah, just a few concerns here. Just, again here, if it's all, well, everyone's talking about China reopening and all the rest of it, but I'm not falling for that one. China's had a long period of growth here. I think that growth is probably starting to sort of slow a bit here now. I think they've built plenty of cities, probably a few too many, and I'm just not as bullish on commodities as most people. I just understand the cycles. That cycles suggest that commodities is generally the last sort of asset to sort of go through a bearish decline before we sort of go back into sort of full bull mode. And so I just think there's some risk there, commodities. And then just the fact that we've gone to a new high here and reversed, and we've done it on really declining volume, that's telling me that's a risky sign here. It's I could be wrong, Chris. I'm not going to go short here. I'm not I'm definitely not going long. But I think there's some real risk in these sort of stocks here. I think it's just starting to see some cracks form in a lot of the commodities there. We've seen all stocks sort of come off the highs as well. Starting to see coal stocks sort of come off the highs. There's some concerning price action in some of those coal stocks. We're just sort of seeing a lot of the resources sort of hit sort of critical levels as well. So I just think there's a few concerns here.
Well, critical levels, we've got Rio Tinto, you've put that in your report. We're looking at the weekly chart here. It has come back up. You're talking about retesting highs, just like Fortescue. Came up right to it. Doesn't look like it got over it, but it's still stalling here. So is that the behaviour that Rio displays here? Is that critical to how it unfolds?
Yeah, so it can be like a potential sort of topping process there. You can sort of get a high in place, and you can get a lower high, and then a second lower high. So yeah, it is concerning there. Again, you've sort of got this really impulsive rally here, but on pretty light volume. There's so many light volume weeks in there. People can argue that you've got your end of sort of holiday period there, but that's okay for 1 or 2 weeks there. But there's just multiple weeks there of very, very low volume on this rally here. So it's lack of commitment in there. So I think this is probably driven by a lot of overseas. Just people sort of trading the inflation trades. I've been long commodities, and probably there's probably a lot of overseas players playing that as well. If inflation's peaked here and it's done here, and then some of the commodities start to sort of cool off here, they'll be out of here quick smart. So just sort of seeing this, I've noticed this sort of pattern historically on Rio. If you go back and look at a weekly sort of 10 or 20 year chart there, you'll see Rio does have this capability of sort of coming back up, and they are sort of stocks that do typically come back really deep in the range, whereas like a lot of stocks, industrials might only retrace back 50%. In the past, I've sort of noticed that BHP and Rio will often retrace back at least 3/4 of the range on multiple, on almost sort of preference over other moves. So it's just definitely a sector where does pull back deep in the range there. So I just think it's a bit of a concern here. Just be careful with these here.
Well, the last one that you've got is another commodity, New Hope Coal, or New Hope Corporation, I should say. We're looking here at the weekly chart, and it's just exponential. We talked about this for many times throughout the rise on the Friday report, the 30/30 list, just how many times the coal companies were up there. But you've got some red circles here, some big down weeks. What do you see here? Why is this one in the report?
Yeah, so we've got this vertical trend. So we've basically got these sort of 3 or 4 ascending trend lines. So once we get 3 ascending trend lines there, we're in a vertical trend. And those sort of vertical trends, they normally go up into a blow-off move. Once they sort of go into a blow-off move, they'll normally basically they'll overbalance the trend. So they'll have the largest correction of the move and on big volume, which is exactly what we've got here. We've basically broken the trend line. We've had the biggest correction of the entire move here, so in terms of price. and time as well. And then after that, oftentimes what normally follows that move there, Chris, is you go back and make a lower high, which is probably, maybe 60, 70% of the time. Probably maybe around 30, 35% of the time, you'll actually go up and make a marginal new high, and then basically fail and come back. So yeah, 2/3 of the time we'll make a lower high, 1/3 we'll go back and retest the high. But yeah, what we've shown here is that that first leg down, we saw some big volume on the way down. We've bounced here on much lighter volume. And then last week we had a really bearish, like an outside week there on pretty heavy volume again. So pretty aggressive selling. So just that's, to me, that's a super bearish signal. That's the end of a vertical trend, an overbalance of the trend, our first lower high, our volume profile. Just everything I'm seeing there technically is pretty negative. So people are going to argue with me about the fundamentals, how much money coal companies are producing there. But in fact, if the coal price cools off again, market looks ahead. So it doesn't matter what you're making now; it'll look at what coal companies are going to make moving forward there. And I think coal's making up a smaller percentage of the energy market over time here. So as we look for other sources there, so just to me, it's just the price action is compelling there. Looks pretty negative, and it fits in line with everything going on. So you've seen the oil stocks, oil prices have come off quite a bit. We'll start to see this here. I mean, I think we're starting to see actually uranium stocks are actually rallying at the moment, Chris, and maybe they'll push on and go higher here. That's kind of like the next sort of energy source there. But they'll too go through the same period there. Probably, if you want to get excited about uranium, we'll probably go push quite a bit higher. But then eventually they'll pop, and then I'll go through the same sort of process as well. So people tend to think these things will last forever. History will teach you a lesson and show you that doesn't. So these sort of vertical trends, they last a period. I challenge anyone to send me a vertical chart there on a weekly that's basically gone up, 3 or 4 ascending trend lines like this on a weekly chart that hasn't ended badly. I've been looking for 25 years. I still haven't found one.
There'd need to be a vertical trend line that goes into a takeover, because that's. But hey, there's a challenge. If someone could find a chart, I'd love to see it too.
I mean, even CSL, which was one of our strongest stocks ever, it's done a few blow-off vertical trends in the past there, and then had some pretty massive corrections, and then gone again, obviously, but had massive pullbacks as well. So even the best stocks can get vertical there and have big corrections, and then go again. So maybe coal has a big decline here, but then maybe it can go again. I don't know, but yeah, I just sort of know the price action is definitely pretty bearish from what I know about charts here.
Well, there we go. We've had a look at some commodities. We've had a look at the indices, some possible trading shares, those building bases. So it's a great week to unpack the report. And we say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
Now, Gary has referenced a few of the trading strategies he's talked about: springs, false breaks. There on the right-hand side, there's a full playlist where we break down those, and also other insights. So Gary's talked about cycles. He's talked about inflation in the 40s and 70s, where he's drilled down into those in previous reports. We've cut those up into smaller segments. So if you want to go back and see what Gary talked about, have a look at that playlist on the right-hand side. Also, we've got the 30-30 list. It's where Gary goes and breaks down, like what we saw with New Hope Coal when it was roaring ahead and leading the market. He's pulled apart the charts. It's the quarterly momentum leaders, and then also some weekly ones as well that make up that 30-30 list. Finally, on the other side, left, there's Gary's Twitter handle if you want to follow him there.